Hi, I'm Peter Rose, founder of Longwood Currency Trading. I'm outside today taking a walk in a beautiful, bright, sunny August of 2025 day to talk about trading Forex and working a job. That's what 99% of us are doing. I'm not. I'm retired. But is it possible to be successful trading Forex and still working a job? How do you manage that? And more importantly than that, why are you trading Forex while working a job? What's the point? Obviously, the point of that is that you probably don't like your job. 85% of the W-2 workers in the United States anyway express the fact that they don't like their job. Well, if you don't like something, why are you doing it? Well, maybe it's because that's the only thing you know how to do, or you went to school and you got your degree and that's how you ended up doing that. Or, maybe you're just not good at anything and had to pick up the only job that somebody would hire you for. In any event, for the 85% of you that don't like your job, I'm sorry about that. How do you get out of that? And even if you like your job and you're intelligent enough to look forward 10 years, 30 years, and say, how much is this job paying me? How much am I able to save? How much fun am I going to have in this life? Because you never know how long you're going to live, so you can't just hermitize yourself up and stack your money and chips up so that you can retire and live happily ever after, because a lot of times that doesn't happen. What was all the work for? Just a bitch? I'm sorry to turn this into a philosophical tirade, but let's look at the future of what you're doing and why you're doing it. Are you just trading Forex for shits and grins? Shouldn't be watching me, because I'll call you out on that. No, you're not trading Forex for shits and grins. You're trying to learn a skill. Why? What's the skill? What's that ultimately going to bring you? Is that going to bring you, I'm adjusting my camera here because of the sun. I'm not sure that's doing any good, but in any event, what are your aspirations in looking at the Forex market? Obviously, maybe you've gone to my website, longwoodcurrencytrading.com, and read on the currency trading page the 7 reasons why I've switched from 40 years of investment in real estate to looking toward learning the Forex market and how to trade that. We're trading it maybe when you're young to have an income, and maybe you're motivated by that by watching some fool driving his Lamborghini with his ball cap on backwards going a million miles an hour, and he gets out of the car and he goes in, checks prices, and he made $8,000 for the day. Wouldn't that be a lovely life? Well, it is for those that can do it. Is that you? Could that be you? Well, probably not. If you're working at a company, could you be the president of that company? Well, yeah. But is it likely that you'll be the president? No. Would you want to be the president? Well, it'd be nice, but would you want the responsibility and all the shit that comes with being the president of the company? Probably not. So don't base your decision to trade Forex on what some 23-year-old driving a fancy car is projecting, because it might not be attainable for you. You might not have that secret sauce. The Forex market is very uncertain too, but it's so big that there's predictability in that uncertainty. And so you have to look at that factor when you're involved in it. Long story about looking at the Forex market for income, and that's fine. But what about Forex for wealth building? Well, if you're compounding your Forex trading, and there's a good way to compound and there's a stupid way to compound. In my course, I teach the good way, the smart way. If you do it the smart way, then you're building the size of your account. As you build the size of your account, that's increasing your wealth. And if you're continuously building the size of your account, then that becomes a predictable thing that you can move forward. I mean, it doesn't take much to make a 40% return trading Forex. Where else are you going to get 40% on your money? I didn't get 40% in real estate. I might have come close to it in short periods of time, but over the long run, 20, 25% compounded would probably be a good gauge, all things remaining equal, because I could have bought, and I did, and I'd buy a 4-unit apartment building and I'd hold it for 20 years. And so by that time, the mortgage was paid off. And so what was my net return against investment? Well, I didn't have any investment at that time. I was a zero cost basis. So my return was infinite. But on a normalized, from mathematics, you could call that a normalized basis, just figuring out your return overall of your portfolio, you could say in real estate, over that 40-year period of time, I was returning 20, 25%, maybe some 30% a year, somewhere in there. I don't know. I don't care. I retired a millionaire, and that was my goal. But when I retired, the cash flow stopped, and then the appreciation of the asset took over. In Forex trading, it's the same thing. It's income coming out that you don't spend, that you reinvest in your account, that builds up, so that someday when you get so much money in the account, maybe that could be $500,000 or $600,000, you figure out what a 4% withdrawal on that would be. If you stick it in the bank and it makes 8% in index funds, and you pull 4% of that out a year to live on, that's $24,000 a year, and added to your Social Security or whatever. I mean, it's going to really help. Most of the people in the United States don't have $600,000 IRAs or 401ks. You know, we're lucky to have $42.80 in the savings account. That's what we're lucky to have, because work is a tough life. And that's why when you're starting out, you're looking at Forex as a vehicle to provide the income to replace your job. And that's a worthy goal. But if you trade Forex to pay yourself your job income, then your account isn't growing. And that would be an unwise decision for you. From an economic standpoint and a financial management standpoint, start trading young so that two things happen. Number one, you make a lot of mistakes and lose a lot of money in the beginning when you don't have a lot of money and it doesn't count. And then you learn what not to do so that you can then compound that knowledge moving forward. And then you've got the time to let that compounding move forward for you, right? So that you're not relying on a 401k at 8 or 12% a year, which the mutual fund company takes part of and other fees take parts of. And then when you go to pull the money out at 73 years of age right now, you're required minimum distribution. You have to pull money out. It may be a bad time for you to pull money out, but you have to pull it out. Maybe the market has crashed and your portfolio is down and you've been counting on that money. And the government says you got to pull 4% out. Well, yeah, you pull 4% out, you need that money, but pulling that 4% out when the market turns around and goes up, what's that $10,000 a year that you're pulling out of the market? What's that? If you'd left that $10,000 in there for the next 12 years as you're pulling other just small amounts of money out, that's going to compound. It's going to sustain that account much longer. So when you're looking at your Forex trading, you can't just say, oh, I'm going to buy a Lambo and put my ball cap on backwards and I'm going to be just like that asshole. Because that doesn't make any sense. Most of the folks that you're looking at that are putting out videos are not working. They're trading, but they're trading all day. So if you are looking at that and saying, well, that's what I want to do, you have to ask yourself, Well, if you're working a job, why would you want to leave that job to have another job? Which is that you have to produce money. You don't have somebody writing you a check and paying you a salary. All you have to do is walk in the door and don't puke on the customer, and you'll get tips and you'll get money. It may not be as much as the Forex market, but in the Forex market, if you get sick, it's just like a job. You can't go to your job, you don't get paid. The Forex market, you can't trade. Or if you do trade, which you probably think that you can, even though you're sick, you're going to make a mistake. So instead of making 2% for the day, you make negative 4% because you screwed it up. You do 3 of those in a row, or in the course of a year, you've lost 12%. So let's look at this thing as a business. If you're going to be working and trading, how long do you have to trade? Well, we know how long you have to work. So my fast track course that I teach assumes that you're working and assumes that you only have 2 hours a day to trade. Maybe you'll have 4, 2 in the morning before you go to work, and maybe 2 in the evening when you come home. But generally, coming home at night is not feasible because you have family, you got kids to take care of, you got to mow the fucking lawn, or whatever it is that you got to do. You're tired after the day. That's not when you want to be trading and making runtime decisions with a lot of money at stake. So 2 hours in the morning before you go to work. I got to get up early to get to work. Oh, okay, well, get up a little earlier, go to bed a little bit earlier, and still have time for your family. You can work that out. If you don't know how to manage that, I did that because I had to run my real estate business out of work hours, and I was easily able to do that. And I had multiple properties and tenants and all that other kind of crap. So if I can do it in real estate, and I was working when I was, I traded options for 4 years back in the late 1970s. There's only, so much time that you can do that when you have work to get to. So can you mix Forex trading and work together? Yes, you can. My suggestion is 2 hours. You need 2 hours. Get up in the morning, and I don't know what kind of training program you've had or what your capabilities are, but what I'm teaching in the Fast Track course is to be able to evaluate the market as I do every morning when I get up. I turn the 15 seconds. I turn the trading platform on, I go in and I'm brushing my teeth. I come back in and I pull the trading screen up and I look. Is there anything I need to sit down and do right then? And I have a set of rules that goes through to do this. Is there anything that I could do right now to make a trade? Is there anything that looks like potentially would be able to occur? Or is there nothing? Those are the 3 questions that I ask myself right there when I'm brushing my teeth or after that or whatever, very quickly. 15 seconds will tell me what phase the market for me is in. If there's nothing that appears to be feasible to do, then I'm not going to trade. I make that decision right then. Now, I'm fortunate that I'm retired. I leave the trading platform open all day so I can pop in and look at it or whatever. Most of the time, I don't make a trade because I'm getting up during a period of time where the currency pairs that I trade are very active. Once you get further along in the day, not so active, right? And so why not trade when the opportunities are there? If I'm not seeing an opportunity that's going to happen all day when I'm looking at it in a prime trading period, then the chances of anything happening during the day are slim to none, right? So go to work early 2 hours. So maybe you get 2 hours extra pay. Or you get off 2 hours extra. But you're not going to sit there for 2 hours and trade. Now, you might be reading a trading book or studying my course or something like that. So you may do that. But 2 hours in the morning, that's all you need. Because if you have a trading methodology that's process-oriented instead of information-oriented, using indicators and all that other kind of shit, that's information-based trading. Oh, the Bollinger Band is doing this and it has confluence with the RSI, and today's Tuesday, I'm going to take the fucking trade. That is just beyond stupid as far as I'm concerned. And the guys that are out there teaching who have millions of dollars that they've made, or hundreds and hundreds of thousands of dollars they've made, what they're teaching you is maybe what they're doing right then, but it isn't what they did to make the money to start with. Nobody's teaching you that because they don't remember. They don't know how they did that. And so now that the little squiggly lines seem to add up with the friggin' Fibonacci levels, they think that that's the signal that they're looking for, and it's not. So if you're going to trade for 2 hours, you want to be prepped correctly. And the education that you're consuming is critical to that ability to make those judgments in the short period of time that you need to make them, and then the short period of time that you have to execute to be successful, and the discipline and risk management principles built into that process that allow you to push back from the table when there's nothing more to do, or maybe you've lost 10 or 15 pips, and that's enough for you to lose for the day. What are you going to lose? Another 10 pips? Another 20? Another 40? You have to have a plan. And most of the education that's out there is not a process. There's no plan. There's like these squiggly lines and these levels of resistance and support, and it's NFP day, and so because it's Tuesday, we're going to do this, but if it was Thursday, I'd do this. This is an engulfing candle pattern, and I'll use it this way today because of that, but on another day, I might use it from here. Things are just changing. They're too dynamic to try to deal with in runtime. What I do is trade by what I call the life cycle of a currency position. Look, I was a software engineer for 33 years, and we used what's called the software development life cycle, the SDLC. I used that for 30 years. And it's a complex process that allows a software engineer to solve complex problems. So I took the framework of the SDLC and I created the life cycle of a currency position. That's what I call it. That's what it is. Now, you'll see other people talking about the life cycle of a currency position because they're just looking at it as, well, you know, the little squiggly line goes from here to here. That's his life cycle. Well, that's not its life cycle. Mine is defined totally differently. And the rules, and there's only 3 rules, and they're conditional-based rules, which is the way you create rules. I don't know how these guys are creating their rules. Well, I know how they're creating rules because I've taken the courses that you're taking. And I've probably spent more money on the courses than you have. And I found out what not to do, which is basically what is being taught. You could say, oh, I'm learning from a guy that was a former bank trader. Really? Did you know that bank traders trade totally differently than a retail trader should? Do you know that a bank trader needs all kinds of fundamental analysis for their trading? Well, we don't. Why would we? It's amazing the misnomers that you will encounter in looking across the spectrum of the Forex market educational space. But that's not the premise of the video. The premise of the video is to show that you can use that 2 hours in the morning to trade successfully if you've got the proper process. Not that you're just going to sit down and you've got 2 hours to trade. If you do that, you're in deep shit. You really are. If you would like a little bit more clarity on this, please send me an email. I'd be happy to communicate with you if you have single questions about your current experience in trading, that I can answer those for you and maybe give you some pointers at no charge. I'd love to do that. I'd love to communicate with people. Maybe we can just communicate and that's all we do. I'm not pushing to sell courses, but I will tell you that if you have a problem of doing XYZ, I can look at that and say, well, have you tried this or tried that? and that'll help you. But if you say, geez, I'm having trouble, distinguishing between when we're in a trend and when we're in a chop, and I'm trying to make this system I'm trading work, and I can't answer that in 25 words or less. You know that. So then we're going to have to talk about, well, what's a process? I'll be happy to sit with you and talk with you about process. And God knows my whole video catalog that I have out there that I've published, over 500 videos, talks about process. That's the way I teach. It's process-oriented trading. That's what I call it. And it's principle-based as well, because processes use principles, not information. God almighty. I can't fathom how confused you must be. But I can. You know why? Because I consumed all that information from 2007 until 2017, 10 years, where I studied the Forex market for academic purposes for, probably 3 or 4 years, and then thought I'd try it. And I didn't do so good. I blew out too many accounts, and I thought, well, I just need more education. So then I started studying the market from 2012 to 2017 for how do you trade this market? Because before I was trading it from an academic standpoint, an academic exercise, writing computer simulation models. I've got a degree in physics and almost a minor in math, so I'm interested in shit like that. I wasn't interested in trading the market. I was involved in real estate at the time and had a job and was all that other stuff. But after I failed with the too many accounts, then I traded in demo, trying to learn how to trade there and taking courses and all that stuff, and learning all the stuff that you're learning right now and believing in its truth. So I funded a $45,000 account in 2017, and in 4.5 months, I dropped $40,000. I just went, this is crazy. And that's where I stepped back from it, and I found that I was being taught to solve the wrong problem. We're being taught to solve the wrong problem. And not only that, even if that was the problem to solve, the tools that were being used to solve the problem were the incorrect tools and used in the incorrect manner. And that's where I came up with mapping the functionality of the software development lifecycle into the currency trading arena. And I took my remaining $5,000 and I just about doubled that in 4.5 months. And I thought, okay, now I understand this. I put another 10 grand in. I was doing okay with that. I added another 50 grand. I was doing okay, and then I added more money. And I was doing it confidently and trading a 6-figure account because I knew that my education was soundly foundationed. And I was doing it the same way that I would if I was employed, because that's the way that I wanted to teach and share. As I've shared the martial arts for 57 years with students, thousands of students, my goal is to share that experience that I've had with others in an educationally sound manner. That's what I'm trying to do. Not bullshit you with driving around in a fancy car. I don't have a fancy car. I hate cars. I use a car to get from here to the store so I can buy a good bottle of red wine and some fixings that I can cook up for dinner, and my wife and I can sit and play backgammon and have a good time. I don't need a fancy car. I got nothing to prove. I was able to retire a millionaire because of my real estate trading and saving money from my in my working career, although the working career money paid for the family going to Disney World and dinner out and all that other stuff. And so, like you, I was saving money, but not enough to make a dent in what would be needed when I was ready to retire. I retired in a financial environment where, as I pointed out many times, this house, well, this is the screen house that we're at, but down there is the house and the barn and all that stuff on 2.7 wooded acres. And I was able to pay cash for this and put another $40,000 into renovation costs for it, all cash, without selling my other house. Because that's what you can do when you have a little bit of money. I planned for this. Are you planning for this? What vehicle do you have that will provide you that sort of money? Forex can do that for you if you do it the right way. If you do it the wrong way, you'll just lose your money, like 90% of the traders lose 90% of their money in 90 days. That's a statistic that was published by a major Forex broker many years ago. 25,000 of their clients, 43 million transactions, showed that 90% of the traders lost 90% of their money in 90 days. And 72% of those that lost money were profitable traders. Of the 90% of the traders that lost money, they were 72% profitable. But they still lost all their money. Now, why is that? Are they stupid? Are you stupid if you lost your money? No. It's because of the education. That's the problem. So if you get the right education, then that 2 hours in the morning is golden. Instead of studying, you could trade. So why not, in my case, my pitch for my course is take 6 weeks, and I'll show you how to make this all go together and work. If you'd like more information on how I would do that, you need to send me an email, and we can communicate that way, or I'll set up a video conference, and we'll chat about it at no charge. And I'm not going to try to press you to buy a course, because I don't need you. I don't need your money. I don't need the aggravation of working with 100 people. I work with a few people. I'd like to work with you. But you have to understand that the failure that you're experiencing is not because of you. It's because of the education that you've consumed. It's what you don't know that's causing you to fail, not what you know. And what you know isn't working because it isn't applicable, most likely, to the problem you're trying to solve. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.